Hello and welcome back. Thanks for joining me for another discussion regarding business and the many challenges therein. What we're going to do today is we will continue our discussion from the last video. And so if you haven't seen the last video, then maybe there should be an index card here or in the description. You can get a link to that, and it probably behoove you to go back and watch that before continuing on with this one. But what we did last time is we discussed and explored the question, why isn't my business growing, or why won't my business grow? And in that video, we talked about two of the three main reasons that businesses fail to grow or fail to succeed. The first one is lack of a clear, concise business plan, well-documented business plan. You got to have a plan. You have to have taken the time, set aside the time, and not at just one moment in time, but on an ongoing basis, you have to continually plan, and you need to document that. And we're going to get into that in even more depth when we look at just business plans, and we can talk about what are some strategies of how to put together a business plan. And now that I'm thinking about it, I'd like maybe pause the video for a moment if you don't have a pen and paper handy, because as I mentioned before, I would like for you to always take away something from this video that is relevant, something that is actionable, that you can put in place in your business today. And so there is really no point other than entertainment value in investing your time in watching a video and trying to gain knowledge. As you know, it's fleeting, and sometimes it's not even about gaining knowledge. Sometimes what you hear, you already know. And there's no real secret and magic bean or pill that you can pop, and that all of a sudden your business will take off. And a lot of this is common sense, and it's stuff that you're probably familiar with, or it's intuitive. But I like to try to educate in a contextual environment or experiential. And of course, what we're doing right now, asynchronously, this communication, this is a means of you educating yourself more theoretically. And what you need to do to convert that to become much more useful is to apply it in context, in the context of your business, with experience in your business. So while you're listening to me, you should be thinking, how does this apply? What he's saying right now, how does this apply in my business? And of course, the audience has a variety of different businesses, different size businesses. Maybe you have 250 employees, maybe you only have yourself working the business, and anything in between. You need to apply what you learn contextually within the context of your business. And so, like I said, pause the video, get a piece of paper and a pen, jot down anything, whether it's brand new or novel to you, or it's something that you've kind of always known, but you're kicking yourself because you're like, yeah, I know that, I really need to implement that, and I never do. Then write it down and make a commitment to yourself, to your business, to your other stakeholders, that you're going to implement what you either learned or what you've recalled, and try to implement it in some way today, even if the first step is just sort of pausing and making that plan afterward, where you take away a little bullet point and you go, I'm gonna implement this. You can always come back and watch these videos and the whole series of them at any point in the future, but it's also helpful for your learning when something about taking a note. That's helpful for learning. So we did talk about two of the three main reasons, one being a lack of a clear, concise, and documented plan, and the other one we talked about is poor management. And again, we'll spend a lot of time in future videos talking about the definition of management, what are the best management techniques, and so on. Last time we talked more about how you may be so busy working within your business that you're not spending the time to work on your business and to manage the resources and to allocate the resources from moment to moment, day to day, as is necessary, as the market demands, as your customers demand. And it may be because as the expression goes, you can't see the forest for the trees. You're too close up. and operating within your business, to step back and sort of see things from the customer's perspective, from the market's perspective. Where is there a market need that you can better fill? How can you add more value? Okay, so that's a little recap of what we talked about last time. And the third one, which we'll cover in a moment, is lack of capital, insufficient capital. It takes money to run a business. It takes financial resources to keep a business going. And so we're gonna talk about the various ways that people gain access to that capital. And but before we do that, I thought it might be worthwhile asking yourself, is it important to know whether your business is growing or not? That might seem obvious. The answer should be obvious, and hopefully you're in agreement with me when I say, of course, your business should be growing. There's cause for great concern if your business isn't growing. But I subscribe to the philosophy, and heard it said time and again, that your business is either growing or it's going out of business, or it's shrinking. Okay, so think of it as, the trajectory, looking at the screen. Your business is going in the right direction with your performance growth metrics, or it's going in the wrong direction. It's never stagnant. Okay, so don't think theoretically, your business can never just be at a standstill, on a plateau. It's either growing or it's shrinking. And if your business is shrinking, you have great cause for concern. So let's explore that just a moment, and maybe you could play devil's advocate in your mind or in the comments and see if that makes sense to you. Is it possible for a business to stay the same? I mean, theoretically, when we talk about growth, we always have to talk about that in the context of a particular time frame. Whether our business grew this month or this year, and compared to what? Compared to the time frame this month last year, or last year in general. Is my business growing since inception of the business until now? Is it growing? And in that context, again, it's either growing or it's shrinking. And if you say, well, no, Michael, actually, when I measure it, my business is staying the same. Okay, good. So let's discuss that. Is it really staying the same? And I would argue that when you think about how a business grows, that should be a cause for concern. If your performance metric stayed the same, and let's say that's profitability, you might measure your business growth in any number of performance metrics. But the main ones we talk about are, say, gross profit, net profit. It could also be you're measuring your sales or your revenues. You might even be measuring on the other side your expenses and your liabilities. You may be, in accounting terms, looking at the balance sheet, the income statement. There's any number of ways that you might measure growth. But at the end of the day, most people care about, am I making money? So the profitability is what we tend to be talking about when we talk about growth. And so I would ask you that, is it really, even if the profitability seems apparently you're staying the same in a particular time, like 2 or 3 months in a row, your profitability is the same. Year over year, your profitability is the same. And what I want to challenge you on is to ask yourself, is that something you're comfortable with? When I make the argument that you should be growing and you should be very nervous and you should react, you should be proactive, but you need to put the wheels in motion and the plan to focus on future growth. The reason I would say that is when we think about, how does a business grow? How do we end up more profitable? These are very elementary, foundational things about business, but it's very helpful to come back to basics. I always recommend for my clients, go back to basics. Always take things back to fundamentals, because sometimes we get so caught up in the thick of thin things. We're up at the superficial level, focused on everything, like, not that they're not important. Some of the details about your operations of your business, like a dress code or a dispute among employees or whatever, is what you're really focused on at that moment. But when we are talking about the health, the viability of your business, the sustainability of your business, and the scalability, the growth of your business, we need to look at the fundamentals. And when we talk about how does a business really grow, grows by 2 things. The conquesting of customers. You conquest a new customer, so you gain new business, or you retain, I should say and you retain existing business. And then we can get into greater details like how do you increase your sales by, looking for new customers, or increasing the amount of sales that you have with your existing customer base, or the frequency with which, like the amount of sales with each order that they place, or the frequency with which they do business with you. So those are the things. But when you consider this and you think, well, growth comes from conquesting new customers and retaining existing ones. I always talk about, so if you've got you've got a cup, and if you were pouring water in it, that's analogous to conquesting new business. If you poked holes in that cup and you had attrition, you were losing customers, customer defection they call it, then your business could theoretically stay the same because you're pouring in a rate maybe that's identical to the rate that you're losing customers. But if you're doing a good job of retaining customers, any bit of conquest you have should grow the business. So you have, to avoid overflowing, we'll get into that in the future, we want to increase the capacities of our business on a perpetual basis as well. So when I asked you about, are you comfortable with the notion that it seems to your business is stagnant or not growing, but also not shrinking, I submit to you that theoretically it's shrinking because you already have those customers. And if your business isn't brand new today kind of thing, you're probably picking up new customers on an ongoing basis, and hopefully you're retaining some of your customers. Therefore, the math should work that it is growing if you're doing things right. If you are losing all your existing customers, that's a huge symptom of a problem, like that maybe your product or service lacks value in the market. And so therefore, you should be uncomfortable with the notion of a stagnant business, a business that is not growing, and hopefully you just agree with me that business is in trouble and it's probably shrinking. The other thing, I guess, theoretically you could look at it is the cost of living, or due to inflation, and these days with what's going on with central banking and all the printing of money, the creation of greater digits in the digital printing machine of money, inflation is huge, and we're going to see that reflected in consumer prices right now. Arguably, you could say it's sequestered in the stock market, the inflation of the stock market, but we're going to see that in consumer prices. But throughout history, we shouldn't focus just on now. These principles we should be able to apply at any time. Throughout history, generally speaking, prices go up. Now, there is some theoretical discussion we could have about technology and deflation and how that works as well. Cover that in another video. But if we say that in general, the cost of living, the cost of you having a home, having transportation, enjoying some entertainment and maybe vacations and clothing and everything, in general, that stuff is costing a larger and larger amount over time. Your business needs to grow to keep up with it. Okay, so if maybe that's enough time we can spend on the theoretical argument of, does a business need to grow? But I thought it was worth going back and discussing, because some people, as I don't want to say silly, but as obvious as it sounds that a business should grow, I suspect many of you aren't really spending the requisite time to focus on how much your business is growing, and you're not paying close enough attention to that. Now, of course, how much your business grows, there's lots of ways to look at that. We talked about performance metrics, and we can get into that a little bit more. Are you looking for a specific percentage of growth, or if we talk about, say, dollars in revenues or sales, or hopefully profitability, are you looking for a certain number of dollar growth within a particular time frame? You have to make those decisions, and you've got to document that stuff. And that comes back to that concept of a plan and your projections and that kind of thing. But let's talk a little bit about what happens if your business sort of feels like it's growing and you feel good about what's happening, but you're not profitable. So that's where you can delve a little deeper into the performance metrics, especially if you're a startup, or especially if you've reinvested in your business and you expect return on that investment. It may be equipment, it could be personnel, any number of things that you're investing in, and your profitability, if that was all you looked at, if that was the sole performance metric you looked at, you could be deceived into believing that your business is in fact going the wrong direction, that you're shrinking, that you're going out of business, or that you're stagnant, but in fact you might be growing. So that's why it's important to give consideration to a number of the metrics. That's also why it's important to spend time, I would say, at minimum monthly, but perhaps daily and weekly, but at minimum monthly, you should be reviewing the numbers and doing an analysis, because there'll be some outlying numbers, some things that surprise you when you look at performance metrics, and that causes you to dig deeper, delve into things, analyze, why is it that my numbers have gone down? I expected more profitability. And then you kind of ask, then you look at your expenses, you go, oh yeah, I forgot. We invested major in marketing last month. That's why our sales were huge, but the bottom line wasn't that much more. But you might rest assured that that marketing investment is going to pay off for several months to come into the future, or that new equipment you bought you're going to have a return on that investment for many years to come, that kind of thing. And we won't get too much into the accounting, but I did want you to think about, well, what else can I look at besides profitability? And it may be, again, depending if you're brand new or what is changing in your business, that you want to look at things like incoming sales leads, incoming inquiries, conversions, digital conversions on your website. How, website traffic, how many unique visitors did you have? It might be your social media engagement. Little things like that, you should not write that off as unimportant. Those can be much finer calibrations, much finer granular looks into whether your business is growing or not. And if indicators like that are going in the right direction, then you might not need to hit a panic button. And it is crucial not to hit panic buttons and abandon your plan just because one particular performance metric isn't stacking up the way you think it should. And so we can talk, maybe we'll do another video in the future about just the various types of performance metrics. On digital marketing conversions, we can spend an entire video just on that, and we will in the future. Again, always, I encourage you in the comments, it doesn't matter if you're watching this on Facebook or YouTube, some way, comment to us what you want us to elaborate on any of these concepts, and we'll spend time in a future video on that. So let's get into that third reason why businesses may fail, why businesses may not be growing. And sometimes it's just a matter of time, right? If we looked at that previous concept that I discussed about performance metrics, you may be actually having imperceptible growth, where all of the stuff in the pipeline, if you've got this sales funnel of business and new leads and prospective customers are coming in the top of that funnel, in your mind's eye, you visualize that out the bottom is coming sales or revenue, or at the very bottom, profit, then it may be that you're actually growing. You're getting more and more customers coming into the funnel, and it just needs a little more time for things to come out the bottom. Now, how does that relate to capital? I would say to you, one of the reasons that businesses fail is they might be doing many or all, nobody's doing all of the right things, but let's say many or most of the right things to grow a business, and they are going in the right direction, but they can't wait. They don't have enough time. They don't have enough, what do they say, money left, or there's too much month left at the end of the money, as it says. But you only have a finite amount of financial resources upon which you can lean and pay your bills while your business grows. And unless you're independently wealthy, I suppose. But even then, wealthy people tend to not be very tolerant of wasting their money. If you're putting money into a business, you want to make sure it's growing. So we want to keep looking at the metrics and finding out if business is going in the right direction, then it should pay off. You should be able to, over enough time, you should be able to realize the profits. And that's why it's so critical to be well capitalized, to have money. And so just a few minutes on that, and then we'll wrap up. Where do I get the money? Okay, so it's one thing to have a great business idea. It's one thing to be able to afford to purchase a business, whether it's a franchise or you buy out an existing business that's been around for years or whatever. But you need to have enough capital to operating capital. You need to have money, financial resources to lean on while you make sure that you've got a well-oiled machine that's actually producing those drips out the bottom of the funnel known as profit. And so where do people get money? I mentioned you could be independently wealthy, and that's probably not many of you. And if you are, you're probably not watching this video. You're out having a lot of fun with your family's wealth. But if you're not privately wealthy, then perhaps you've saved for years. Maybe you've worked a job. If you listen to Robert Kiyosaki, Rich Dad, Poor Dad guy, he talks about earlier in life, young people should spend time working a job for a couple of reasons. One, to get the education that the job provides. And that's worth something. And in his book, in the first few chapters, he talks about how he worked for free as a kid for his rich dad, and how it was the education that was the payoff. But he also talks about the second reason that I was touching on today is that you can use the money, if you spend wisely and you live below your means, you can save money from an income you have on a job. And one of my sons actually worked 3 jobs at one time to fund a business he had with 2 employees. He had 2 employees working on the side. He was working 3 businesses to be able to afford payroll for the business. So there's that way of getting capital, is basically having other income sources and redirecting money to your business, or saving over a period of time. It might be that you have a plan. Maybe you're just graduating and you're like, I want to start a business in 5 years, so I'm going to work hard right now for someone else. I'm going to pick up some lessons that'll serve me well in business, but I'm also going to put aside X percentage of my income that I can invest in my own business. So talk about family wealth, savings. Speaking of family, a lot of people, including the richest man in the world, Jeff Bezos, borrowed money from his, not mommy, he didn't borrow his mommy. He borrowed money from his mommy and daddy, from the parents. It's very common for entrepreneurs to start up their businesses with loans from loved ones. So that's another form. Of course, there's the bank. You can go to the bank. That scares a lot of people, and you may not like dealing with the bank, but that is, of course, a line of credit. Maybe you have to tie it into, your home equity line of credit. You have to put your, or a second mortgage or some kind of collateral of your personal. You might have to personally guarantee the loan for your business. That's not uncommon. And there's things like venture capital firms, angel investors. Some of the maybe less thought of forms of generating capital is vendor financing. Like if you think about the concept of you buying someone else's business, maybe the vendor of that business, the previous owner of the business, is going to, it's in his best interest to get the price he wants to fund you and keep you going. He knows the business very well, and he believes in it. And so he provides you with terms in which you can get some operating capital from him. Maybe he's on his way out, retiring, and he's done well, and he can afford that. And that's a good opportunity for him to get a return on his money, as opposed to putting it in the stock market, if he really believes in you. So think about that for vendor. That's one form of vendor financing, but there's others. Sometimes suppliers will provide you with operating lines, like maybe your primary source of inventory comes from supplier X, Y, or Z, and they will advance those inventories to you on the promise to pay in the future. And that's a form of capital, operating capital. It's a line of credit from vendors. So think of that if you haven't already. Another one that's not very common, I would say, for small business owners, but it's certainly extremely common in the world, is selling equity in your business. So, that's what the stock market concept is founded on, is that you can buy a little tiny sliver of a company like Apple. And of course, we can think of smaller penny stocks where smaller companies on a stock exchange are publicly traded, and they're selling pieces of their company in exchange for money that hopefully they can use wisely as operating capital. But you can do that privately as well. You don't have to be a publicly traded company, and it's very difficult and costly to become a publicly traded company. So consider doing this privately. And that's probably what Jeff Bezos did. I think I'm right about that. His parents, he didn't guarantee the loan that they gave him, and I can't remember how much it was, but in today's terms, it seems like peanuts. But they got equity in this rather risky startup that he was doing. And you can do that with, so you're selling equity. It's better than just seeking a loan, I guess, depending on the investors. Whoever's lending you the money, they have to make the decision how much they believe in you, how much they believe in your idea and your concept. But ask yourself, have you considered selling a little piece of your business to give you the capital to wait out while you're growing, or to increase the growth, to increase your chances of growing, to give you competitive advantage, whatever it may be? Are you looking to have all the eggs in your basket and, I'm not willing to sell any part of my business? That's perfectly fine. It's your business. You get to decide. But many people decide to sell a piece of their business it could be a completely private, silent partner, somebody who is not going to operate at all, or they might sell it to somebody who brings something besides money to the table, like some business experience. You watch Shark's Tank and Dragon's Den, and that's closer to the concept of venture capital, but it's all the same in terms of the relationship. It's just, we're talking what I'm encouraging you to consider. You could either advertise, but more likely consider somebody who, and it might not be your parents or somebody that close. It could be someone through someone else who has ample investment and they're willing to invest in you. But you've got to prove yourself. If you don't have any track record that they can believe in, and your business idea isn't unique, or you aren't able to communicate that unique value proposition, it can be very difficult to get anybody else. And then just one other thing, that you can also sell corporate bonds as a means of generating income for your business. And so that's different. They would talk about fixed income investments. So somebody might be like, not really willing to give you this money simply in exchange for X number of shares and the hope of earning more in the future, whether it's capital gains or dividends on those shares in the future. It may be someone's like, if you guarantee me my original investment back plus X percentage of interest over time, a fixed income, that's more like selling a bond in your business. So you could do that. And so again, in order to do any of these things, you're going to need to have that well-documented business plan. You're going to need to have a good business idea, and hopefully you already have that. Create the plan and be able to communicate your vision to people that may be able to help you get capital if you don't already have it. So I think on that note, maybe it's time to wrap up. Just remember those three things again. Hopefully you've taken a note or two. But the first one is making sure that you have a well-documented, clear, concise business plan that takes into consideration. And by the way, the process of documenting that will help you to figure out holes. And when you present your business plan to other people, they can play devil's advocate and find holes in your plan, maybe things you hadn't considered, and you can get that business plan more and more concise and more comprehensive of what your plan is. Secondly, you've got to learn about management. You've got to be a good manager. You can't just work on your business. You can't just work in your business. You've got to work on your business. You've got to plan. You've got to have strategies, and you've got to strategically look at how you're going to grow your business. You have to do that regularly. You can't start and do it in the beginning and then just work on that. You've got to look at that original plan and look at, did I execute the steps that my plan called for? And if not, why not? Are they still good steps? Are they still good ideas? If not, change your plan. If so, recommit yourself to doing that. And if you're too busy in your business to manage your business, then we need to talk. Contact the wealth management experts at BMI, and we'll help you figure out how we can assist you with that management. And then capital, what we talked about today. Make sure that your projections in your plan give you enough time, sufficient time to be able to grow and realize the returns on your original investment that you thought of. So maybe you agree with a lot of the concepts I talked about today. Maybe you completely disagree. Anyway, either way, I would like you to challenge me. Add some comments that our community of listeners can benefit from, and I'll elaborate on various points for you in the future. I love a healthy debate. If you completely disagree, you think I'm nuts about a point I made, let's talk about that. Maybe I'm going to learn something from you, and that would be wonderful as well. Thanks for listening today. Until next time, take care.